In this video, I want to look at how LLPs are taxed and compare them to limited companies now that we have new tax rates that are in the system. I'll also briefly look at what an LLP is. I do regular updates on tax and accounting issues, so if you want to be kept up to date, then please subscribe to the channel, and if you press the like button, it helps me in the channel, so thank you for doing that. So what is an LLP, a limited liability partnership? Well, it's sort of hybrid between a limited company and a normal partnership or a sole trade. So like a company, you have to file accounts, you register yourself at Companies House, and you have the administration a bit like a limited company, but it's taxed like a normal partnership or indeed a sole trader. So the tax is like a partnership, but the administration is like a limited company, and you do get that limited liability. One of the main benefits of having an LLP, which has nothing to do with tax, easier to share profits around between the partners if you want to share profits differently each year, and it can be easier to get people in and out because it's expected that new partners arrive and old partners leave, and you don't have to buy and sell shares in the way that you would with a limited company and have the resulting capital gains tax issues. That advantage is the same. The other perhaps disadvantage of an LLP is that the tax liabilities are personal on the partners, whereas in a limited company, the company tax is a liability of the company and not a personal liability of the shareholders. So that's something just to consider before we get into it. So what's changed in LLP taxation? Well, actually, nothing's changed. So if nothing's changed, what am I talking about? Well, the thing that has changed is the taxation of limited companies, and therefore when you compare the taxation of limited companies to that of LLPs, then that's where it matters. In an LLP, you're simply taxed on the profits, and therefore you apply your tax rate. So you'll pay your basic rate 20% and your higher rate maybe 40%. Then you'll pay the national insurance 9% at the basic rate or 2% at the higher rate. And that's the tax you'll pay. And you'll pay it on all the profits, even if you don't take them out of the business. Tax has gone up in a limited company. So the base rate of corporation tax, so for some profits it's still 19%. For most profits it's 25%. And if you're on the margin, it's actually 26.5%. So a lot of people who've got profitable small businesses are actually paying 26.5% corporation tax. And then in order to get the money out of the company, you need to pay the dividend tax, which has also gone up by 1.25%. Increase all the tax rates. The tax rate as a basic rate taxpayer, it is still a couple of percentage lower if you're in a limited company and you're paying 19% tax in a limited company, and it's a couple of percent higher if you're in an LLP. So as a high rate taxpayer, you're likely to be paying the 26.5% corporation tax or at least the 25% corporation tax, and then you're going to be paying the higher rate of dividend tax. And if you multiply all that through, you're going to have a tax rate of somewhere 51 and a bit percent tax. So they're going to take half of all your money. Whereas in an LLP, they're just going to take 42%. So 42, that's an 8 or 9% reduction by having an LLP. So that is actually a material advantage in having an LLP. So with that advantage, why aren't all higher rate taxpayers becoming LLPs? So one of the problems with having an LLP is that all the profits are simply taxed on you. So what that means is that the retained profits, money that you retain in the business and don't take out of it, that'll still be taxed at a higher rate. So you can end up paying a lot of money in tax when you're not even taking it out of the business. So that is one of the disadvantages of having an LLP. But if you're going to take all the money out to the partners anyway, because you don't want to retain the profit, then that doesn't matter so much. Another advantage of having a limited company as opposed to an LLP and that immediate tax is that in a limited company you do have time just to think about things before you take the money out and pay higher rate tax. So you might just leave it a little while, see how things go, then maybe put into your pensions, or maybe buy some assets that are tax allowable. So you've got more time to contemplate things, and that doesn't sound very much, but actually it can be really important. And then there is the tax of cars. So cars are taxed very differently in an LP to a limited company. And in general, in a limited company, if you have an electric car, it's actually better in a limited company than in an LLP. Whereas if you have a normal fossil fuel car, then it's often better in an LLP, but it does depend on just what mileages you do and what the costs are and what your circumstances are. But that is the general rule. And then just a final thing on the difference is that once you earn £100,000 a year, then you lose your personal allowances. Now, in a limited company, most people, very, very rarely do people take money out in such a way as they lose their personal allowances, because normally they take £100,000 out. Maybe their partner has some shares in, so they as in their life partner, so they take £100,000 out, and that's normally enough. Whereas in a limited liability partnership, if you have a really good year, you can be caught out and then pay very high rates of tax because you're losing your personal allowances, and then that can be really important. So there you are. There are advantages to having an LLP because the tax rates are lower, but there are disadvantages because you have this immediate tax effect, and the company car thing is a little bit weird. So if you'd like further advice on it, or you want to look at it in more detail, then please let us know. If you want to be kept up to date on tax and accounting issues, then please subscribe to the channel, and if you press the like button, it helps me and the channel, so thank you.